From today on, make the rest of your life the best of your life. How did the biggest bankruptcy in America? In this video, we will be taking a look at some biggest bankruptcies in American history. Bankruptcy is a term in fashion in 2023 and hasn't been this popular in almost 15 years, since the 2008 Great Recession, which led to the folding of some huge companies. Had we written this article just a month ago, there would be two changes in this list, two bankruptcies that have resulted in a global crisis that we still don't know the extent of. While bankruptcies are common, not just in the US but globally, as successfully running a business is a lot more difficult than TED Talks and motivational speakers would have you believe. Major bankruptcies are generally quite uncommon. You can compare this list to our earlier work if you visit the 15 biggest companies that went bankrupt after the 2008 Great Recession, which resulted in some of the biggest bankruptcies in American history, as well as the folding of several smaller businesses. Some of the biggest financial institutions in the US were deemed systemically important, or colloquially referred to as too big to fail, including most of the biggest banks in America by asset size. While major banks in the US haven't seen a failure since the Great Recession, 2023 saw that scenario change completely, with Silicon Valley Bank collapsing in March. Silicon Valley Bank, like most major and minor financial institutions, had invested heavily in governmental bonds when interest rates were hovering near zero. However, when record inflation hit the globe, including the US in 2022, the Federal Reserve Board responded by hiking interest rates consistently throughout the year, continuing into 2023. Because of this rise in interest rates, the face value of the bonds that SVB had invested in declined. Now, normally that wouldn't be an issue, as if held to maturity, the decline in value would either likely recover or not be as significant, and any current losses would remain unrealized. Unfortunately, because SVB's clientele is largely comprised of tech startups whose cash flows aren't as strong when the cost of borrowing increased because of higher interest rates, these companies had to take out their deposits, because of which SVB had to sell its bonds. The biggest misstep, though, came from SVB's CEO, announcing the company's losses and the requirement to raise capital to the public when the capital had not yet been raised and wouldn't generally have been considered to be a problem. But because of the public announcement, panic abounded and a bank run was made, resulting in around $42 billion being withdrawn in a single day, leaving the bank with a negative balance of $1 billion and resulting in the California Department of Financial Protection and Innovations shutting down the bank. This was followed just a few days later by another huge lender in Signature Bank, thus sparking concerns of a wider banking crisis and resulting in financial institution shares plunging on 13 March. This led to the Biden administration stepping in to assuage concerns and promise to secure the deposits of all customers while simultaneously not bailing out the bank, which would cause huge losses to the company's shareholders and creditors. After the federal government promised to secure the banking deposits, shares rose, but as concerns continued, the week commencing the 13th of March 2023 was a wildly uncertain one. One of the worst impacted banks is First Republic Bank, which has lost over 80% of its share price in just the last month. There have been fears that First Republic Bank is on the verge of collapse, which led to a consortium of major banks, including Bank of America Corporation, JPMorgan Chase & Co., and the Goldman Sachs Group, Incorporated, coming up with a rescue package for First Republic Bank worth $30 billion, a move attempting to show their confidence in the banking industry. However, the share price of First Republic Bank still closed 33% down, even after the deal. The ramifications of the US banking crisis go far beyond the country, considering the importance of its financial institutions to the global economy, which is why it was unsurprising to see European banks impacted heavily as well. None more so than Credit Suisse Group AG, the second largest bank in Switzerland, whose share price fell by a third in just the last 1 month, resulting in $54 billion being offered by the Swiss National Bank as an emergency loan, and UBS Group AG acquiring Credit Suisse Group AG on 19 March 2023 for over $2 billion. While the long-term fallout of the current situation is uncertain, it may impact the probability of the US avoiding a recession after Janet Yellen, the Secretary of Treasury in the US, said that could turn this into a source of significant downside economic risk. The Goldman Sachs Group, Incorporated, has also said that the banking crisis increases the odds of a US recession in 2023, saying that the chance of the US entering a recession is now 35% instead of 25% in the next 1 year. Because of the uncertain situation right now, The biggest bankruptcies in American history may potentially change over the next few months. For example, if First Republic Bank fails, its $212 billion in assets will make it one of the biggest bankruptcies in American history easily. While there have been some major bankruptcies in the cryptocurrency sphere after the collapse of FTX, one of the largest cryptocurrency exchanges in the world, followed by Celsius, their assets pale in comparison to the companies on our list. We have used our previous compilation of the largest bankruptcies in American history and updated them to include any major collapses that deserve to be on this list. For SVB, we have used its asset value from its website, while for Signature Bank, we used its asset value from Yahoo Finance. So now, let's take a look at the largest collapses in the U.S. Number 6. General Motors Corporation. Assets at time of bankruptcy: $91,047 millions. You might be surprised to see General Motors Corporation in our list of the biggest bankruptcies in American history, considering that General Motors Company is one of the biggest car companies by sales. However, General Motors Corporation refers to the company to whom the liabilities were left, while assets and subsidiaries were sold to General Motors Company in 2009. The company received over $17 billion in bailouts from the federal government. Number 5. WorldCom Incorporated. Assets at time of bankruptcy: $103,914 millions. WorldCom, one of the largest bankruptcies in American history, met its demise as a result of a major accounting scandal. The company, which was the second biggest long-distance telephone company in the U.S. at the time, overstated its assets by more than $11 billion in 2002, resulting in its demise. The WorldCom scandal is one of the reasons why the Sarbanes-Oxley Act was passed, while WorldCom, which was then renamed to MCI, was purchased by Verizon Communications Incorporated in 2008. Number 4. Signature Bank. Assets at time of bankruptcy: $110,364 millions. Signature Bank was closed on March 12, 2023, just 2 days after the collapse of SVB, when customers withdrew over $10 billion from the bank due to uncertainties caused by the SVB collapse, not to mention the crypto-friendly Silvergate Bank, also currently in the process of liquidation. The bank was also scrutinized by the U.S. Department of Justice for its failure to properly check signs of money laundering in its clients' activities. Number 3. Silicon Valley Bank. Assets at time of bankruptcy: $212,000 millions. We've already discussed Silicon Valley Bank's collapse in great detail in the intro, and as to why it occurred. The full impact of the bank's collapse remains to be seen, but even in the short run, it has wreaked devastation and fear across the global banking industry. Number 2. Washington Mutual. Assets at time of bankruptcy: $327,913 millions. It is still the largest bank in the U.S. to have fallen, having more assets than SVB and Signature Bank combined. It was the largest loan and savings company in the U.S. till the time of its collapse in 2008 after a 9-day bank run resulted in nearly $17 billion being withdrawn from the institution. The banking subsidiaries of the company were then sold to JPMorgan Chase & Co. Number 1. Lehman Brothers Holdings. Assets at time of bankruptcy: $691,063 millions. Easily topping the list of the 21 biggest bankruptcies in American history is Lehman Brothers Holdings, which will take some beating considering its assets were valued at nearly $700 billion at the time of the collapse. Even now, only 6 banks hold more assets than Lehman Brothers did at the time of its collapse. Lehman Brothers collapsed in 2008 after its involvement in the subprime mortgage crisis, which resulted in an exodus of customers and its share price crashing. Leave questions in the comments below and we'll respond. Subscribe to our channel for more helpful videos like this. Thank you for watching, and until we meet again, stay healthy and happy. I'm giving you some news you can use.